Conrad Saldana is Managing Director and Portfolio Manager at Nuremberg Berman. Conrad, great to have you with us here. It's good to see you back on the program this morning. Prashant this side. We find ourselves, if many believe that the global is not that important for us, there are many triggers, many cues lined up here, which will keep the market higher. And there are those who believe that perhaps the single most important cue is essentially interest rates in the West, especially in the US, and the picture is getting a little murkier. I just wanted to get your sort of top-down view. Do you think that is important, and what's the degree to which it is important if it is?
Sure, thanks for that, Prashant. I'm going to preface that by saying I'm a bottom-up investor, but one of the things to look at historically, you'll see that the NASDAQ and India trade somewhat closely together, right? And massive gains you've seen in the last fiscal year from India. So I think there's a bit of a chink in the armor, right? Where you look at oil prices up 20% year to date. You look at copper, which is more of an industrial metal, right? And I'm going to leave out iron ore based metal, which is much more driven by China. So for copper, much more electrification, grid investments, et cetera. That's up 10% year to date. There's some supply issues, but demand seems to be pretty good, 3+%, 3 to 4%. So I think when you put that in, there's some inflation scares, if you will, on the horizon, and obviously that means imported inflation for India. So I think that's something to watch out for, given that I think globally the consumer, while they've done reasonably well, it's been a very divergent consumer. So you've seen the high end do really well and the low end kind of faltering around, whether it's in India, it's the US, you pick any country, including China for that instance. So I do think that does matter, imported inflation and how that trajectory looks. But otherwise, India, it's all about the earnings, and looks like on the manufacturing side, industrial side, that continues to look good. FDI investment, as you guys mentioned earlier, looks pretty solid. Potentially we've got Tesla in the offing here, and so all that points to a pretty robust FX picture for India.
Okay, but the only problem that we're facing right now, Conrad, is that everything seems to be very expensive. The Indian markets is fine at 19-20 times, but if you look at individual stocks, pockets, there is no valuation headroom, especially in the broader markets. How do you deal with that as we head into a new financial year?
That is a challenge, obviously, for stock pickers like us. I think one of the areas that's been left behind until more recently has been the financial sector, right? There's been concern, whether it's on the NBFC side, obviously the biggest one, HDFC, that deposit growth looks pretty solid. And that's what people were hoping for in this quarter. And they seem to be getting aggressive and working through the merger process. So I do think the financials still look pretty reasonable. Especially, I would say, the private sector financials, the larger private sector financials that were kind of laggards in this whole run. So I do think there's some opportunities there. And I think you've got to look, if you look at automotive, we've spoken before on ASK Auto, those still look pretty good. The smaller businesses, but they're compounding much faster. The ones that do look expensive and where the fundamentals aren't great on some of the consumer staple names, where you're starting to see softness in earnings that's persisted. We can go back for probably at least a couple of years, right? And so that's where the challenge is. The other one where the fundamentals seem soft and valuations quite aren't conducive on the IT services sector. You're seeing Accenture's news come out, and so IT budgets with this whole AI push, people are trying to figure it out. And so budgets remain the same, but within that, the shift towards hardware, Gen AI and the hardware pertaining to high-performance computing is taking a much bigger chunk of that, of which maybe the IT services stuff, which is 25%, is being probably shelved to a certain degree, or at least being questioned. So that's an area which looks less exciting. But I think once you peel back, whether it's the infrastructure companies, you still get plenty of opportunities. But some of the smaller names moving up significantly, some of the consumption names, they're trading at premiums that you cannot justify.
All right. Hi, Conrad. Good morning and good to see you. Nigel on this side. As you said, you're a bottoms-up investor. And I recall when we spoke last, you were seeing HDFC Bank, some concerns on deposit, as you've mentioned. That's soothed some nerves, at least investor concerns out there. We spoke about manufacturing theme, Jyoti CNC, Dixon, other stocks. Could you tell us any kind of recent investments that you all have made in the Indian markets?
Yeah, I mean, Jyoti CNC was a recent one we spoke about, Nigel, last time.
Yeah.
Obviously, supplying into the Apple chain. We've spoken last time, I think, on cash management. Again,
Yes, CMC.
that again is yes, and that CMSN4 that actually is trading 15, 16 times earnings in a very cash generative business. So you do find attractive opportunities. We're not a high turnover shop, and our strategy is much more investing over the long term. XPro was one we spoke about the last time. Again, a long manufacturing runway. They're going to treble capacity. So those are the businesses we like. They're not going to find a whole bunch of change there. But I do think there was an opportunity more recently for us to add to some of the financial exposures that we have, whether it was SBFC, again, compounding quite nicely. They obviously got a tempo growth well north of 30%. You get the RBI calling, knocking on doors. But I do think there's a good runway for folks who are very disciplined in their lending practice. So I do think there are opportunities in that, Nigel, as well.
All right. So, Conrad, more of the same then. XPro that you had spoken about, Jyoti CNC, you had a chance to add on to this private banks. I wanted to ask, some of those companies you got in early, like a Venus Pipes. The stock is almost at 2,000 rupees. Any of these companies, has it run its course? Are you all staying invested? Will you look to add more?
We're staying invested because our view is, again, the runway longer term is going to be a good one. So for Venus, again, if you're paying 20 odd times earnings, a business where you look at a cash PEG ratio, you're going to grow at 20, 25%. I think it's still a reasonable multiple to pay for that business. Obviously, it's not as deeply discounted as it was, and it wasn't discovered at that point, Nigel, but I think that's being more recognized as we move forward. One area I will mention since the last time we spoke, given the volatility in the market, you had that sell-off earlier, we like the hospital sector. And this is one we've got quite a few exposures in our portfolio. Max was a newer name for us. Again, high return businesses. They're growing faster on the larger cap side. Max was an opportunity, given that there was noise about the Supreme Court looking at containing pricing or limiting pricing. Obviously, that created an opportunity. I think it's difficult to implement. But as you're seeing more and more insurance starting to pay for these treatment and services, 50+% as that grows larger, I think it's still got a significant runway for the healthcare sector.
Conrad, the HDFC Bank ADR has shown us some pace last night. If one believes that, and some do, the large caps maybe, a little tilt there perhaps is the way to go, because simply because in the near term, maybe broader markets have done so much better. So the large caps will catch up a little bit. Do you think HDFC Bank has in it to outperform in a meaningful way? Forget about the long term, even in the near term. Say I'm talking about the next 2-3 months, next one quarter, for example. Could it meaningfully outperform?
I think it's very difficult, Prashant, to call the shorter term on it. Obviously, people were fairly negative. These were long-standing positions. The merger process and the synergy to play out is going to take a fair bit of time, right? Seeing the deposits come back, which is the raw material for them to be able to lend again, is important. I do think there's room for HDFC. You consider HDFC Bank at sub 2 times book value, right? We're talking about close to even 1.7 times book value. It does look attractive fundamentally, but it's going to come back to them consistently growing, showing those synergies coming through. That's going to be a 18 to 24 month process.
Okay. Before we let you go, a couple of other stocks, a couple of other groups that you have been bullish on. One of them is the Murugappa Group. You like Chola Investments, you like Tube Investments as well, Chola Finance. Some of these stocks have done phenomenally well in the recent past. Do you see more upsides here?
I think it's there are two things. One, when you see these stocks perform as well as they do, it's whether they're absolutely correct or there's a time correction, right, till they build into the next set of numbers. For Tube, again, they've got to have the next inflection in terms of growth. I do think great governance, exceptional management team backing it, and diversifying out their business areas, whether it's directly through Tube or through CG. That's going to be the next runway for them. So I do think it's a reset. But again, I'm bullish on them longer term as one of the few companies and industrial houses that I do think will continue to compound, whether it's EV getting more traction for them. That's going to be their longer strategic roadmap. I think Chola on the finance side, again, the sell-off, not a cheap business, but one that's compounded significantly. And I think at the size that they are, I do think they've got plenty of room to grow. Where people might have concern on the larger financials, I think Chola Finance, CIFC, has plenty of room to compound in the future.
All right. In fact, a stock like Tube Investments is already up 40% in the last 12 months, right? It's been a phenomenal run there. But thanks a lot, Conrad, for joining in. Really appreciate your thoughts here. And hopefully we'll get to speak to you again very soon.